All right, my friends, a subscriber sent me a link to the Motley Fool Social Security tax calculator. I thought it'd be interesting to look into this, as a matter of fact. I haven't done it yet, so I thought we'd go through it together. I haven't done anything with this calculator. Why does it not let me go bigger? It's weird. I haven't done anything with this calculator at this point, so let's okay, there we go. Let's go ahead and run this. So this is dated, Dateline, June 6, 2016, by Matthew Frankel, TMF math guy, okay? All right. Are your retirement benefits taxable? Depending on your other income and tax filing status, your Social Security benefits may be subject to income tax. Depending on your income, up to 85% of your Social Security benefits may be taxable. There's a worksheet in the IRS pub that can help determine whether your Social Security is subject to tax or not. However, the easiest way to figure it out is with a Social Security tax calculator, which can help you determine how much will be taxable at your marginal tax rate. Okay, there you go. Are your Social Security benefits taxable? If you didn't have significant income besides Social Security benefits, the answer is typically no. Whether or not your benefits are taxable depends on your combined income. He's calling it combined. Actually, Social Security Administration calls it combined income. And Matthew here is doing the same thing. It's actually probably the better terminology for it. I call it provisional income just because I've been using that since the dawn of mankind, and I'll never not use it because it's ingrained in my head. Which is defined as your AGI plus your non-taxable income and 1/2 of your Social Security benefits. And there's a formula: AGI, non-taxable interest, plus 1/2 your benefit. For your benefits to be taxable, your combined income must be greater than $25,000 if you're single, or $32,000 if you're married filing jointly. Because only half of your Social Security income is considered in the formula, and the highest possible benefit in 2016 is $44,000 a year, Social Security income by itself isn't ever enough to make a single filer to have to pay tax on it. When it comes to married couples who file jointly, both spouses would need to be high earners for the combined Social Security benefit to exceed the threshold. Even then, it's not taxable. We'll go into that. In a nutshell, if your Social Security benefit is taxable, then it probably is because you had substantial other income. It's also worth mentioning that if you're married and filing separately, the income threshold is 0. Wow. I did not know that. If you're married filing separately, you have no income threshold. Your benefits will be taxable. Interesting. The calculation can be complicated. Not really once you do enough. You just got to do this. I'm just telling you, give yourself a couple of scenarios and just run the numbers. It took me a while, a couple of days, but once you do it, you get it, it'll make sense. I'm telling you. It's okay to take time to figure this out. Somebody, I was watching a video, was it Devin? I think it was, and he said if they don't know how to do the calculation on the Social Security, they're not, they don't have a good enough grasp of Social Security. I don't know if I agreed with that. I mean, anytime you're doing tax calculations, it's okay to sit back and think about it and put it on a piece of paper and just kind of run. It's almost like doing when you're in math class, they say, what's the EM equals MC squared or whatever. You're like, I don't know, let me think about that a little bit. Some folks just need time to write it down step by step. I know I do. I think it was Devin, actually. I said, I don't agree with that. I mean, look, I love Devin. Everyone should subscribe to his channel. He's not going to agree with everything I say, and I'm not going to agree with everything he says. Of course, he should agree with everything I say. All right, so let's go down. Now, notice I said up to 50%, 80%, 5% of your benefits are taxable. It's not simple of multiplication. All right, to figure out how much, all right, we're talking about. Now, let's go into the tax calculator. All right, here we go. So I want to mess with this. We're going to say we're married filing jointly because it'd be Charlotte and me. We're going to say our marginal tax bracket, we'll say 12%. I don't know why we'd put our marginal tax bracket there. Oh, that's pretty cool. It has a pop-up for you right there for 2019. I don't know why you put that in there yet, because it says your federal taxable income brackets. Well, we don't know what that's going to be yet, but okay, we'll just go with it. We're going to say with no capital gains, with no short-term, no taxable interest, no tax-free interest, no pension benefits. We have taxable IRA distributions. We're going to say we have $35,000. Oops, $35,000. All right, and that's it. We have no wages, none. Okay, Social Security benefits received. We're going to say we have $30,000. All right, let me pause. I want to get my calculator, see if I come up with what they come up with. All right, so hold on just a second. It'll be interesting. All right, so just in my little thing here, I got $30,000 Social Security, $35,000 of IRA distributions, which gives us a provisional income, or again, a combined income of $50,000. because you take half of that Social Security benefit and add it to your other income, which gives you $50,000 of combined. Or see, I'm just going to keep going back to provisional income because then I'll confuse myself. All right, so we have $50,000 of provisional income. We know the first $32,000 is not subject to taxation. We know 44 minus 32 is 12,000, and 50% of that is subject to taxation. And then in this case, we have what $6,000 is at 85%, okay, times 0.85%, which equals, bear with me just a second, my friends, 5,100. All right, so let me just show you what I'm talking about. The first $32,000, if you're married filing jointly, none of it's subject to taxation. The next $12,000, which is 32 or 44,000 minus 32 is 12,000. 50% of that is subject to taxation, and then any amount above the 44, 85% of that is subject to taxation. In this case, because we have $50,000 of total provisional income, we have $6,000 in that third bend, which is subject to taxation. Okay, so we take the $6,000 plus the 5,100, and so our 11,100 of our Social Security will be subject to taxation, if that makes sense. All right, so 11,100 plus the $35,000 of, man, I gotta get a new pen here, $35,000 of IRA income that we have, which means our AGI will be 46,100. All right, 46,100 is our AGI. Now what we do is we take our standard deduction. Man, what's our standard deduction anymore? If we're over, we're going to say it's 24,400, I think. 24, this thing's really getting my nerves. 400, because we're going to say we're under 65. So we got 46,100 minus 24,400, and I might be off a little bit on the standard deduction. But all right, I'm going to have to go get a new pen here when we're done with this video. So we got $21,700 of taxable income, $21,700, because we got the $11,100 of taxable Social Security, add to it the $35,000 of IRA income. It gives you $46,100 for AGI, adjusted gross income. Would subtract out your standard deduction. Again, I'm assuming it's $24,400 off the top of my head, I don't remember, but gives us a $21,700 taxable income. All right, so $21,700 will put us just above the 12% tax bracket. So the first 20,000 or so will be subject to 10% taxation. So that's 2,000 of taxation. 21,000, 1,700 be subject to 12%. And that will be 1,700 times 0.12. We'll be right at 204. So we'll have about $2,200 in taxes. All right, so let's see what we got. You ready? That's what I'm saying, about $2,200. Let's see what these guys say. All right, did I hit submit? Is it working? All right, I know we hit submit that time. Oh, here we go. All right, there we go. Adjusted, yep. Add lines to it. I like it. So basically, yeah, they're doing total Social Security benefit, one half of Social Security benefit, AGI. All right, that's I don't like that, but I get what they're saying. Okay, so they're saying AGI. Oh, okay, I see what they're saying. They're using AGI. They're saying basically that's my IRA distribution or any other kind of income. I see what they're saying. That makes sense. I like that, actually. That's pretty cool. Because they're saying calculate, modified, adjusted gross. Okay, sweet. No, I see what they're doing. They're using all this different kind of income and put into one thing called modified adjusted gross income right here at $35,000. All right. So we take $30,000 from Social Security, take half of that $30,000, add to our other adjusted gross income, which gives us a combined income, provisional income of $50,000. Yeah. The base amount is $32,000. We have $18,000 plus $32,000. So the first $32,000 is tax free, leaves us with $18,000, which is subject to some tax. $12,000 is the second bend point. 50% of that will be subject to tax. Then the next amount, I don't like the line of, it's confusing me for all that. The 6,000 will be the third bend point times 0.85, and we're going to have taxable Social Security of 11,100, just like we said. We know, okay, well, okay, so, okay, gotcha. You can go through this on your own, but 11,100, just like I said. So of our Social Security, 11,100 is taxable. Percent of Social Security subject to taxation, 37%. Estimated tax due, $1,332, and I had what, $2,200 I don't know. Let's see. But is that just taxes due on Social Security? Taxable portion of benefit. I don't get how they're getting estimated taxes due at 1332. I don't get that. Are they saying because it's 11,100 times 0.12? Yeah. Oh, see, that's come on, man. Jeez. They're saying this entire amount is taxed at 12%. It's not taxed at 12%. Come on, man. I mean, geez Louise. So let's change this down. We'll say this is 10%. Now we'll hit submit here. I just can't help but laugh. Why would they say? I mean, come on! Don't you know the marginal tax brackets? Now they're saying it's 1,100 because now it's at 10%. All right, so they're just saying how much of your Social Security benefit will be subject to taxation. They're not even using the margin. I don't get what they're doing here. Everything else makes sense except this last part. It doesn't make sense to do that. The reason being because Social Security, your tax is thrown into your, the tax amount of your Social Security is thrown into your taxable income, which is added to what? It's going to be added to this $35,000 of other adjusted gross income. That's how you do it. I don't get why. I mean, here, if we go back to marginal tax rates, hold on just a second. Right here. So let's just do, I mean, look, we can do 22%, but why would you, I mean, come on, that's stupid. Let's go to submit. All right, where's the submit button here? Right there. Okay, so now I got it as 22%. Because now they're saying our taxes are 24.42, but we're not. Marginal rate, the first amount of taxable income up to roughly $20,000 is taxed at 10%. And your taxable income is your taxable Social Security plus your other income. After you take away your standard deduction. I don't get why that's that hard. And so the marginal rate is not, I mean, just this goes into your marginal rate. Okay, so the guy who sent me this email about the silliness of the Motley Fool tax calculator was spot on. This is completely, it's just not, you can't use it. It's unreliable. It's wrong. I don't know what else to say it. So, anyway, I hope that helps. It's that's just actually quite infantile. And it was good up until the last point. And the guy who emailed me about it actually said, does it make sense to use the marginal rate when we're not even, we haven't figured it out yet? And the answer is no. So hope this helps. As always, like we see here, subscribe, and we'll see you next time. Thanks, Dow.